When we're trying to grow wealth, when should a client actually loop an accountant in? What's the ideal time?
At the beginning, and start with the end in mind, not just taking that next step, because again, where we see clients get hamstrung is not thinking about steps 2, 3 and 4.
So what are your philosophies around property buying and how do you use this with your client?
I've seen a lot of strategies online when it comes to property. Look, all strategies can work, but my personal philosophy is that I prefer to let the market do the hard work and not me. So I personally prefer to buy existing properties and just hold it for a long period of time. And I just know it works.
Talking about creating wealth, generational wealth, what should parents actually be thinking of?
One, when do we want to give money to the kids? The other component is, back to estate planning. And then also things like insurance, that there's a need for it, particularly when you're building wealth. And then as we have wealth, we can then scale it back down.
Go slow to go fast, and we'll get there. Doesn't matter how long it takes, but we'll get there safely, and it won't stunt your growth. It will keep you moving forward. Hey everybody, welcome to this episode of Finance This, Property That. Welcome back, Jem, and a man that needs no introduction because he's been probably the most recorded guest, Luke. Thought it'd be good to have Jem back on along with Luke. Because, mate, well done. 12 months on, buying with a mate.
Thank you.
Here we are.
Yes, here we are.
This is the one that all the punters wanted to hear about, I hear.
Great.
So
well, here I am.
Here you are.
Ready to reveal it all.
What I want to cover today, and, Luke and I have had this conversation about your situation, is that, mate, you've proven that you don't need to go by this property alone. You've been dealt certain cards, and a lot of first-home buyers and people are bloody whinging out there right now that can't get in the market, But I think you've proven that you can. You just have to do things a little bit differently and have a good team around you. And what we'd like to find out from you today is what's been happening in the last 12 months, some of the things that surprised you, what advice you'd give. Also, you've gone into this with Tom, co-ownership. It's a
Shout out to Tom.
Yeah, shout out to Tom. Sorry he couldn't be here. Just only realised last night. Sorry.
That's all good. I'll cover him.
Yeah, and talk about some of the challenges with challenges and good outcomes with co-ownership and the practice that no one talks about. Mate, I'm excited to hear what's next.
Yes. Where do you want to start?
Hey, I'll start with, let's go back. Before, when about over 12 months, I think we were episode 38. I'm up to like episode 90 something now. This will probably be close to 100, I think. So quite a long time between drinks. You hadn't even purchased the property yet.
No. I think I started looking actually I probably first had a meeting with Luke in, was it February last year with Tom? Just to sort of figure out where we were sort of sitting borrowing capacity wise. And then by about, I'd say April, May, we were cracking on with the search. It was well into all the Excel files and scraping all the data from the account, sort of the files at work, and figuring out if we could sort of just contact owners direct to miss out all the competition in the market. And I think only about maybe 3 weeks into the search, 3 or 4 weeks into the search, because I remember talking to Luke and sort of having the conversation around we might run out of the 3-month period.
The pre-approval.
The pre-approval period for our search. But then one just came across the desk through our database, and it was sort of one of those ones where you see it and you see the price and you see the house and where it is, and you just have to drive there straight away and inspect it immediately. And that's exactly what I did.
Yeah.
I was at work, I was in the office, and I saw it and I went, wow, I asked Chris, I was like, can I go now? I think this could be a good one for me. And he goes, yeah, go for it. Yeah. Bang, on the lunch break, headed down to Kingston and inspected it. And yeah, from the get-go, it was obvious that it needed a serious amount of work. I wasn't quite sure the extent of the work because I hadn't had a building and pest yet. But that was the start, and then got under contract for, I think it was $650.
And you negotiated pretty hard because we were
pretty hard
because you got a lot of because once you found the defect, Yeah, I don't know. She wasn't too happy because
She wasn't. Well, this is an interesting story actually, because so initially we had under contract for 650, which it worked well at, because at the time we were already buying it probably like maybe 100 grand under market value. So at 650 it worked well, and then the building and pest came back, and there was some stuff there, but there probably wasn't the extent that I was pushing it to. I think I asked for like 80 grand off. And I listed all the reasons out and pushed the agents to sort of push it on the seller a bit. And we got it down to 580 or 585 agreement on the Friday afternoon. So probably about 4 p.m. on the Friday afternoon, we got the agreement verbally through the agent and the owner at 585 contract price. Submitted it to the solicitors. And then by Monday morning, when it came across the solicitor's desk, the seller had changed her mind on the agreement of the reduction and was now only agreeable up to 612. And there's nothing we could do because they hadn't actioned the request on the solicitors. So it was a bit of a bummer. We missed out on, like whatever it was, 20 grand or whatever. But in the end, doesn't really matter. Yeah.
all in all, you're still 100K
exactly.
up before,
Yeah.
and like you're probably more now. But obviously you found a few things along the way, but we'll talk about that later. But mate, so I think when we spoke, you'd just done an article in, I'm going to say
Courier Mail.
Courier Mail.
Yeah. Pin-up boy.
Pin-up boy. And
Yeah.
And then so settlement happens. Mate, what surprised you about this process that,
To be completely honest, leading up to settlement, nothing really surprised me because I'd done so many of them previously. I would say that this is, out of all client deals that I've done in the past, this was probably the most difficult deal because the vendor just made it so hard for us. Like she wasn't agreeable to any sort of requests leading up to settlement, which are pretty minor. Upon settlement, she left so much stuff behind that the solicitors just couldn't help us sort of get a reduction in price to get it moved out. And she just made the whole process so difficult, which in the past I've never sort of dealt with before. And then we can get into some stuff later on, but yeah, we've found a few issues later on that she'd sort of embedded in the property that we weren't aware about in the building and pest. And it was difficult. I was definitely stressed at that period for a number of things, but I think at the time it was also because I had Tom alongside me. I was educating him through the process, and he hadn't had a clue about property. It was the first property he looked at.
Yeah. And I think he's very lucky, like I was just about to say before, he's bloody lucky to have you in his corner and doing this with you as opposed to like doing it with someone that's never done property.
Yep.
Would you agree with that?
100%.
Like, I think it would be very
100%.
hard because there's a lot of curveballs.
Yep.
And I'm sure Luke from the finance, like you were telling him this and he's like, what the hell are you doing?
It's not something that I see every day either. But yeah, having you there guiding Tom was invaluable. Obviously you hadn't seen it to that extent either, but
And you're lucky because you work in property. So you see these sort of things happen every day. But I think, what I'm hearing is the one thing that didn't surprise you was the way Luke organised your finance. That was the one thing you didn't have to worry about.
Of course, yeah. No, never had to worry about that. It was unfortunate that Luke was having a baby at the same time. So it was like, it's sort of, he was thrown in the deep end.
Well, Caitlin was having the baby.
Caitlin was having the baby.
So I think you better get this right, otherwise.
Exactly. I was pestering him, and then he sent me a text saying, oh, sorry, man, I'm having the baby. And I was like, oh, geez, sorry to
kind of need you, though.
But no, it all worked out in the end. The team helped me, and Luke did all the work leading up to that, and it was a smooth process.
Yep, awesome. What advice do you think you'd give someone else, like in your position?
Oof. Well, right now, I think it's a lot easier than it was 12 months ago. There's less interest in the market, so I would say if you're looking right now, it's probably a good time for a first-time buyer to look. There's much less competition. I mean, in the sub $1 million mark, there's always competition. But right now, bit of uncertainty, you can get some good deals. You can get reductions in price for properties that have been sitting on the market for a couple of weeks and the sellers want to get rid of them. But in terms of advice for first home buyers that I give them from my experience, I'd have to say don't give up, because I think a lot of first home buyers, and it was actually funny, I sent Luke Tom's sister that he worked with closely and got them over the line, and their process was probably one of the smoothest processes I've ever seen for a first home buyer, and it's just not how it usually is.
Yeah.
Like I think the first property they looked at, they put an offer in, they got it, and it was done.
Yeah,
and it's like, okay.
Done in a couple of days.
Looks like, oh, damn it, I can't say I'm having another baby.
Yeah, in a super tight market as well. That was really hard. It was really competitive at the time.
Yeah.
But I've got mates as well that have gone to like 10 or 15 open homes a weekend with their partner. They've split north side, south side. One's done 7, one's done 8 on the south side. And they've just tried for weeks and weeks and they haven't given up. And that was at a time when it was obviously super competitive. But if that's happening to you, you've got to keep pushing forward. You've got to keep going, and you've just got to trust your gut on in terms of do your research on the sales in the area, and if there's an opportunity to hit them on building and pest. I know first home buyers probably don't even know that's a thing.
No.
But if there is something wrong with the building and pest and there hasn't been a huge amount of interest in the property and you think you can you have the leeway to push them a little bit, then do that definitely and see where you land. But yeah, you can get advice from your solicitor on that as well. I think just know and be aware of where you can sort of have an edge. I know it's difficult if you're not in the space, but the main thing is in a tight market, it's difficult anywhere. In a quiet market, you've got a bit more of an advantage.
What are you seeing?
I was just going to ask Jem, what do you think? There's a lot of first home buyers going out weekend after weekend after weekend and not having any luck. Like, what do you think what do you think the main reasons are?
It's a good question. I think they're probably uneducated on what questions to ask the agent. Number one, you have to ask them the basics of, is there any other offers, obviously? Where are they at, if they can give you that? What conditions would be preferable to them in terms of settlement? And also, if there is any other offers, what are the conditions of those offers? So you can try and place your offer somewhat competitively. I think they're probably the major things that they're not doing, and they're missing out on properties, putting in silly offers or going too low on an offer, or sometimes if they get it too high on an offer where they just wanted to get something because they've been trying for months and months, and then they've paid $100,000 over. Yeah. And in a market like we are now, where it's not moving as fast as it was, that's dangerous. Yeah. But yeah, they would be the main things. Like you've got to push the agent.
Yeah. Got to be strategic about it. Yeah. Hey. Be educated, and there's some great resources out there to get educated, like this podcast. So if you're serious about getting into the market, do the research.
Yeah, and I think you had to. You're talking about having an edge. I think you have two edges. One, you're in the industry, and I think you already had Luke that guided you through the process, especially nurtured Tom through the finance process as well. How many of your friends were organised? They're going to see 15 bloody things. Like how many?
Yeah,
of them
that's
are
a good
organised?
question. That's a good question. I've definitely had a few friends that think they want to buy and just aren't ready at all.
How do you make an offer?
Aren't ready. Exactly. They don't have their pre-approval. They've got bloody 7. I've got one friend of mine specifically that's probably gone to 7 or 8 different mortgage brokers and hasn't landed on one. And in the end, as he's been waiting this whole time, the market's been moving fast, and he's probably missed out on $200,000 of property growth.
Has he gone to Luke?
I think I did put him onto Luke initially, and I don't know where he's landed now. But
I think I know who you're talking about.
Yeah, I always try and refer
the
everyone
indecisive. There's always one. Eh?
There's always
it's like,
one.
I'm trying to get the best deal. There's no bloody best. Like it's all everyone's giving you the
now's the best deal. Yeah.
What I find a lot of first home buyers is that they don't even have a chat with someone. Like they just automatically think that they're stuffed. Like the market's too hard.
Definitely.
Like poor me, can't get in. But they won't actually take that step to go and have a chat with a mortgage broker. It doesn't cost them anything. Like get the information that they need. Like we spoke how long before you actually took action. Like it was a fair while before we sort of had things lined up ready to rock and roll.
Yeah. I had a different partner initially, and then things changed, and push forward.
Yep. And we adapted because we looked at, okay, can you buy on your own? It wasn't possible for what you wanted. And then we adapted and had a look at a different strategy, and here we are.
Because it's not only investors that need strategy, right? Like I've just done a podcast recently talking about your first property and how you structure that first property and how you set that all up. Is the foundation of every other property that you buy. And we'll talk about why this is going to be important for you guys, right?
Yeah.
But it's so important. And having someone that like understands, okay, well, what do you actually want to do with it? How can we get you to where you want to be? Not now, but in the future is so important. I think, Luke hangs around people that talk about investments, so automatically you're going to get that investment talk. He's layering on the skill set. Have you thought about this? Ask the extra question. If your broker or bank is just giving you a pre-approval and ticking boxes, you're with the wrong person. Like I don't think if they're not giving you a strategy.
Agreed.
I don't know. I feel very strongly about strategies and putting in applications when we don't need to.
Yep.
How are you going about your changing? Remember, like we got that budget that's probably being released by the time this has come out.
Yeah.
There's going to be more woe is me as a first home buyer. But what's the conversations you're having to alleviate? Like just to go, this is just all in your head, guys. Like, you've got to do the work.
Yeah, correct. There's probably having some more firmer, sterner conversations with first home buyers, and just being real, not trying to give them false hope or anything. Like this is the way it is, and if you want to get in, this is what we need to do. Map that out, whether it's a savings target that they need to hit. Okay, how much are you saving each month? All right, this is how long it's going to take us to get there. I've actually created a budget platform as well that first home buyers can now use and help map that out, which I think is going to be, like, I'm really excited by it, help people get there. Because if you don't know what the savings target is, you're not going to reach it as fast as if you did know what it was. And we're looking at options if I can't buy a home to live in and take advantage of all the first home buyer incentives and if that doesn't make sense, well then we're looking at, rentvesting or maybe buying with a family member or a friend.
Guarantors.
Yeah, guarantor. There's endless options and possibilities. But with these first home buyers sitting on the sidelines thinking, oh, poor me, like never going to be able to get in. Well,
it's just not true.
If you don't have a conversation with someone that specialises in helping first home buyers get in, well, then you've not even turned the pages on any of those strategies.
You're never going to get it. You're just going to be sitting there and complaining.
Yeah. No, correct.
Have a chat is number one. Have a chat.
The cards that we've got at the moment aren't great, but there's two ways you can go about it, right? You can either get on with it and make the most of what the cards that we've got, which Jem you've done, credit to you and Tom, or you can say poor me
and wait till the market's right, and then you're spending an extra 10, 20, 30% on a property which you could have made 10, 20, 30% growth on. We're about to touch on that in a second. I think the other key point as well, people not sure, going to 15 open homes. I don't have the time to do that.
Exactly.
No. And there are some really good buyers agents out there that specialize in first home buyers. They don't charge through the roof, right? Because let's face it, as a first home buyer, you're pretty skint on the whole money situation, right? Jess from Vesta has a specific first home buyer plan. And I know she's helped a lot of first home buyers. I'd rather, if it was me and I needed to save money, I'd rather go find ways to make money over the weekend to save that money and then get her to do all
exactly
for me.
Exactly.
But I guess I'm probably wired a little bit differently because I'm in that.
Well, you can see the value, right? Yeah. It's hard for a first home buyer to see that value.
It is.
Without being out weekend after weekend banging their head against the wall. Yeah. To actually realise that, there is some value in that.
Yeah. And I'll probably challenge a first home buyer a little bit as well. Your first home's never going to be your forever home.
Well, I was going to get onto this in a second because I've had conversations with my mates about this, and the first thing I asked them is, why are you doing it? Why are you buying this house? Because a lot of them get stuck at the first question of what are you buying this specific property for? It's not going to be your first home. So if you can get that out of the way, then you may as well buy something that's going to grow. If you can, land or a house, because that's going to grow faster in most cases than a unit over time. And once we get past the first barrier of, okay, well, if you want to live in it, sure, a unit's probably, or somewhere near home that is a unit that's within your budget is probably the right move. But if you don't want to live in it in 15 years' time or 10 years' time, then change your thought process around this and reap the rewards.
Have a strategy in play.
Exactly.
Because how old are they on average? How old are your friends on average?
23, 24, 25.
Mate, far out. You got 40 years before you retire.
Yeah.
Come on.
I'd hope to retire before then.
It's not, like if you retire, far out. Like think about, you're right. You were just saying it as well. Think about it a little differently. There's more than one way to buy a property.
Yeah.
And there's more than one strategy out there. I know that the first property that I bought is not the place I'm still living in at the moment.
There you go.
The third property was like the actual family home, but now that's not the family home anymore. It's my investment. And now I'm renting where I want to live.
Exactly.
Because it's cheaper than buying where I want to live.
Yeah.
Okay, different situation.
Yeah.
But, it's, I don't know, man. Like I just got to.
You got to think outside the box these days.
Yeah. How do you grow wealth? It's not going to be easy. It's going to get harder to grow wealth, but you can be smarter about it.
Yeah. Yeah. But gone are the days, I think, of, you're only first home buyer once. You've got to get access to everything, like the first homeowner's grant, stamp duty, concession, blah, blah, blah. But if it doesn't make sense in the area that you live in, if you've got to move an hour away from where you work, well, that doesn't make sense, does it? So have a look at, it's not necessarily, for a lot of the first home buyers I'm talking to, a lot of them doesn't make sense to buy a home to live in. Like they're living at home with mum and dad, not paying any rent or board. Mum and dad are happy to go guarantor for them. And they want to buy an investment property because they're happy living where they are. Mum and dad, it's a good relationship. Stay there for a couple of years. Maybe they'll move into it down the track. Like there's all these other different options that are becoming really popular.
There are some there are lenders that do guarantors on investment properties.
Yep.
Right? There's heaps of policies that people don't know. But if you're going to a bank that doesn't have that policy, they're not going to tell you that this other bank's got the policy. You probably need to see a broker because they've got access to over 40. But also, with the guarantor piece, the guarantor is not forever either. Because the idea is to buy smart. If you're buying with a guarantor, you could probably afford a buyer's agent because you can tie that into the guarantor part.
Yep.
As long as you've got the servicing for it all. And then the idea is hopefully you've bought wisely, it's grown, you knock the guarantor off, restructure the debt.
Yep.
I don't know. There's so many options. I think
Have a chat is number one, isn't it? Have a chat.
What I'm keen to, just ask this question to Jem. You're what, 23, 24?
24, yeah.
Yeah. So what are a lot of your friends saying about the property market? Like what's the general consensus?
It's mixed, but I would say the majority are in the same mindset of what you were talking about before. Of it's just too difficult. I've got a couple of friends that own businesses and they're obviously finding it a little bit easier because of the income. But for people on a first job salary of 70 to 80 grand a year trying to buy by themselves, extremely hard unless you're buying maybe a 1-bedroom unit or studio. And they're a little bit demotivated by that. I've tried to educate people where possible to engage a friend or a family member to try and join those incomes and buy something better or smarter. But yeah, I would say that across the board, a little bit demotivated and sort of lacking interest in because of how difficult it might be or might seem to them. But the first thing is have a chat, find out where you are now, what you can do, and what maybe you can do in a year's time or 2 years' time, and work towards that. And if you can, try and get in the door as soon as possible. Yeah,
because I don't, property will appreciate as it, like you don't need to go buy an investment property 12 months after you buy your first property.
Yeah,
you got to let time do its thing. You got to let your incomes increase, all that sort of stuff. You need 3 things to buy a property or grow property portfolio: income, deposit or equity, and a good credit file.
Yeah, the key pillars. Yeah,
they're your 3 pillars, and then that circling those 3 pillars is a strategy. You're gonna need a team behind you. I think you're very lucky. You've got a lot of
I've got a lot of teams behind me, so that's always handy.
You just know where to look, right? And again, you can educate people. you used a very new policy to buy for Jem and Tom, didn't you? It was was it called? Was it co-ownership, or was it what's it called? You're buying with a friend policy.
Yeah. So we initially looked at it. However, under the first home buyer incentive that we're using, we're unable to use it. So it's the what's the name of it? It's CommBank's policy.
Property share.
Property share, that's right. So we did initially look at that, but weren't eligible to use that actually the way that you structured the loan under the 5% deposit scheme it is now, but first home guarantee back then. So yeah, we obviously wanted to make sure that we're being careful around the co-ownership and what that brings, having the conversations around what happens if one person wants to sell, or what if one person has a partner and they want to buy an investment property, or any of those sort of things, like, what happens when you buy together. And so we had those conversations. You sought some legal advice, which is always important. But it's obviously important when you're buying with a friend or a family, right?
Yeah.
Family member versus maybe buying on your own or buying with a partner. It's very different.
Yep. What? So during that, like, want to get your perspective on this, because it's a fairly new thing that people are doing and people can do, because it was really basically taboo beforehand. And how do you go about, in this sort of structure, how do you go about decision making?
Well, in my case, I guess it was pretty straightforward, because I sort of just said, hop on my back and I'll carry you forward with decision making. But in other cases, I think that it could be difficult and you need to set up some form of legal structure, because there could be times where you hit roadblocks and you don't know how to move forward. And if you have that to fall back on, then I think it's compulsory really. In most cases, you should get that done and set up some 50-50 agreement where, if the worst case scenario, this is what happens. But yeah, in my situation, I just sort of passed on my knowledge to Tom and said, this is what's going to happen. This is what's going to happen in 12 months' time, or this is what we should do in 12 months' time. I had all the answers for him, so we didn't really hit any of those roadblocks, or too many roadblocks during the process, and it was quite smooth. But I can see how in other situations, especially if you're dealing with like friends or family members, where you can butt heads and you need something to fall back on that's going to be legal, or it's going to sort of point you in the right direction.
And what did you recommend that Jem and Tom did?
Yeah, have a chat with the solicitor to get something drawn up to explain exactly what you said. What happens if ABCD happens? So there's something to go by. It's a rule book essentially for the property, because you're essentially going into business with this person, right?
Pretty much, yeah.
Like Tom's taking a big leap of faith. Obviously, you're like you said, having him on your back and you're walking him through the whole thing, which is bloody awesome for Tom. Like, kissed on the ass. Was my thoughts. But it's important to have that document, so you've got a piece of truth as to what happens at what junction.
Definitely.
Yeah.
Yeah, and I think there's good solicitors out there that specialise in that now, with the co-ownership models becoming more popular.
Spot on.
But yeah, when we did it, it was pretty smooth, I'd say.
Yeah, and even if you don't go through that whole legal process, or you still get the advice and you don't sign an official document, make sure you document all the conversations, and just sign those documents. It's better than having nothing documented. I think, again, very lucky that you were there sort of holding his hand, and then Luke was there.
Thank you one day,
Luke was there holding the fort on the finance side of things, and you were doing the property side of things, and it just worked. But mate, we're 12 months down almost 12 months down the track. Was it October?
Yeah, it settled in about September time.
So that's a really key date, and you guys have been doing a few renos on the place. Yep. So what have you guys done on the place while living there?
Everything, pretty much. It needed a full reno. It needed a full reno. I was lucky that I had contacts that could get it done for a good price. Similar to you, I think, with your brother, was it? I had my dad's kitchen and laundry designer, so all the trade we could get done for quite cheap, and kitchen done at cost price. We had mates that were tradies as well, so we could get the bathrooms done for a reasonable price. And then high pages, we just put it out there and got 5 or 6 quotes for each thing, and usually we're able to knock off a few thousand of each one as it went on. And I think we're for a full house reno, so for a kitchen, bathroom, floors, paint, and a lot of sweat equity. I think we're at about maybe 35 to 40 grand all in total for a full house reno.
That's unreal.
Which isn't bad for for upstairs and downstairs. And the house is getting painted on the outside today as well. So
it just cost Tom a phone.
Exactly right. Yeah. Unfortunately, those things happen. Yeah.
Sorry, Tom. But so who decided? Being shared decision. Who decided on the paint?
That was actually a joint decision. Yeah, we went for something pretty neutral that would hopefully hold up on the market when we eventually go to sell it down the track, whether that be 5 years' time or 10 years' time.
Yeah. So there's some key dates that before we sort of really want to kick on, before any sort of strategy comes in. What are some of those key dates that Jem and Tom have to look out for based on what do you call it? What grants they use?
Yeah, schemes and whatnot. So it was important, again, strategy, because we openly spoke about what the goal was with the property. Like you said, it's important to go into a property with a plan. And so you guys have had a plan. Obviously wanted to take advantage of the first time buyer incentives that were out there. So, got access to the stamp duty concession. So obviously there's different triggers and time frames that you got to work with to live in the property for at least 12 months. Which you guys are doing. And then we also got onto the first home guarantee scheme. Now the government's 5% scheme. So you can't actually, rent that property out until you've got 20% equity in that property. Like you said, you've done a lot of sweat equity. You've added a lot of value to the property. We've had a couple of desktop valuations come back already and they've come in really healthy. We haven't even done a full valuation yet. So we're pretty excited to see where that lands.
So hang on, let's just run these numbers, man. So 612?
Yeah, contract price is 612,
612, no stamp duty.
No. Probably
5%
15
deposit.
grand saved there.
Yeah, 5% deposit, which is that another
Probably
15%.
saved 30 grand in LMI.
Yep. So what's that? 45,000.
Yeah.
Right, cool. So we got 45,000. How much was your reno?
40,000, roughly.
40,000. So we're talking about 652 all in. What was the latest val?
Where did that land again?
Without taking the reno, without doing a full val.
Was it up near 800?
800
it's
wasn't it?
around 800.
Low eights. Yeah.
Hopefully we expect the next one to come back mid-eights, and then
that less than 12 months.
But that's without a valuer going in there and looking at all the renos.
Correct.
That's just based on data.
Well, that was that was the photos that existed previously, which were shocking. They were really bad. So
let's call it 650. Right, all in.
Yeah.
To 800, made 150,000 under 12 months.
Yeah.
You're already out of LMI territory.
Yeah.
I'm telling you that right now. So, but we don't want to rush, I guess, is what we're saying. Sorry to cut. I'm just like, the numbers. What are the? Because you talked about vals.
Numbers are important.
Numbers are really
important.
But so how's the numbers now going to affect your strategy that you had?
Well, Jem, do you want to dive into what the strategy is?
Yeah, I guess. Look, down the track, we always had this plan of doing something more with the property. So the higher the revaluation comes back in, I guess, the better, because we plan to, when we're past the date of the schemes and the grants, and we're in the clear zone, plan to pull some of that equity out and start with a secondary dwelling at the rear. So hoping that the valuation comes back in after the renos at somewhere in the mid-8, so we can access hopefully 70 or 80 grand worth of equity to use for the hard costs of the dwelling that goes at the rear, and crack on with that as soon as possible. So
rough cost for the dwelling at the rear, if
all in.
Yep,
all in. We're probably around 450, I would say.
Yep.
So if we can, use a bit of that equity to cover the stuff that we can't get financed, that would be super helpful, because, as you said, first home buyers aren't cash sort of rich at the moment, and every cent helps us get those things done quicker and
So and basically you've turned one property. You've done the time in there. You basically got the ugly duckling. Basically, turned it into a swan. manufacture. You're going to manufacture equity. You're going to manufacture income. You're going to actually add value to the property market. Someone could potentially rent that out. So you're actually giving back. Like in a way, you're actually giving back to the community as well by providing housing. Then you're going to end up with 2 properties because you'll probably, I'm assuming, in that council area, you're going to be able to, because it's over a certain amount, you're going to be a part of their planning scheme is you'll be able to strata it.
Correct.
You'll be able to then, after build, have 2 properties. What would the second property be worth post? It'll probably be about...
So the second property, I would say right now, if you were to build it and sell it today, it'd probably be around 920, 930.
Yeah.
And the front house maybe around 800, 810.
Because it's a little bit older.
Yeah. So you're always going to lose a bit of value in that front house because you're taking away the backyard.
Yeah.
But yeah, great result.
That's
for,
huge.
For something that settled in like September last year.
First home buyer.
Yeah.
So if you're sitting out there thinking that, woe is me playing the cards, you probably have the wrong team and you got the wrong attitude.
Yeah.
And this stuff just doesn't happen without a bit of blood, sweat and tears either, right?
No.
Yeah, it hasn't been an easy journey like we've just talked about. Because you've had planning conversations with Luke, planning conversations with Tom, probably got Chris's input as well.
Yeah. Well, I mean, I do it every day. So surprisingly, Chris, he did help me at certain points, but it was a lot of just like general knowledge from doing it so often. But yeah, it was definitely a lot of blood, sweat and tears. We're at the end of it now, but yeah, since settlement, it's been it's been a shift.
Yeah,
we haven't had much time.
Well, how's it enjoying being actually in a fully renovated house as opposed to like living in a partially renovated house,
great.
Cooking on your little Weber barbecue?
Yeah, we did all of that. Yeah,
Deck chairs out the back.
washing under the hose.
Yeah, you've nailed it. It's unbelievable to be honest.
It's an experience.
The first shower was probably one of the best showers I've ever had in my whole life. Yeah, I remember just sitting in the renovated bathroom and or standing in the shower and just going, wow, this is from where it was 6 months ago. This is unbelievable. Hot water on my
that
body.
moment it hit. Yeah,
it all hit me. And I think I fell in love with the house at that point.
Yeah.
Which is probably bad.
might keep it forever.
Yeah.
But I think, look, it's a great foundational asset. We're talking about building the foundation. You'll turn one foundational asset into the second foundational asset. You'll have 2. And, mate, Tom's laughing.
Yeah. Well, 50-50 split. Yeah, he's laughing every day.
Yeah. It's a good option. And then once you've set that second part up, then we can go back or Luke can go back and potentially do the property share side of things. And now you're, for the future, that's that future proofing but it's going to take time.
Yeah.
Right. We've got to hold the horses on the next purchase because you're already literally doing the next deal anyway. And once the structure's done post investment, I think that's going to be when you can really launch because you'll have that equity in those properties and go. Is that sort of the general idea?
Yeah, pretty much. Yeah. So there's a plan, there's a process, and we're just ticking each box off as it comes. So without that plan and strategy, these sort of things can't. And this hard work, the sweat equity.
Yeah.
I think a lot of people like your age, our age, with the help of AI and things, we've just got no patience. A lot of the people our age and don't want to put the hard work in. So credit to you and Tom for actually having a crack.
Yeah, hopefully we can reap the rewards at some stage. Because at the moment, it's hard to see through that, to be honest, when you're working every day and you got no time and you're finishing work and you're going there and your weekends are taken up by it. And it's like, all right, we're just going to get through this 6 months. Once you set your mind to the goal that's sort of in the future, it's more motivating. And in the meantime, it's like clockwork. You just have to power through it for the meantime.
I don't know how many 24-year-olds just made 150,000 under a year in their job. So
hopefully more.
Like, you know what I mean? Like, look at it that way. 75K each.
Yeah.
On top of what well, when I say made, I mean like you've manufactured equity, you've grown your wealth by 150,000, and you're not paying tax on it.
Yeah.
And this experience that you're going through will be invaluable for the work that you do as well, right?
Yeah, definitely.
Like you live, eat, and breathing it.
Yeah, exactly right, especially with the renovations, because I think there's sometimes where you can start a renovation and you can have an idea in your head of what needs to be done, but until you're actually doing it and you're seeing all the small things that eventually pop up, then you notice, okay, this is probably more serious than I thought going into it. Because I think we set a time limit, and it was never going to happen, but we set a time limit in our heads that we'd get the renovation done by the end of February. But then things happen. You go away in December, you go away in January.
And you got another trip coming up too.
And you got another trip coming up, and then next minute it's done in April. So
but hang on. So your life, just because some of the decisions you've made hasn't actually been hampered. Your lifestyle actually hasn't been hampered because you haven't really stretched the budget either.
No,
right?
that helped. Yeah.
Hang on. So this just adds to more evidence that you don't. Oh, man, you can still do it. Make 150 grand, and still go on
have
trips.
A life.
Yeah. Well, I mean, it was bought really well. Like now, it's a lot more difficult. I think you'd probably be paying 150 to 200 grand more than we did back then, if not even more. And that's just all market movement in that area. It was just a good time to buy. But yeah, it was fortunate, I'd say. There was a strategy, and we executed it, and we bought it well, and we did well.
Yep. Sweet. Closing statements, Luke?
No, it's just really good to see. Like people like Jem and Tom should be celebrated and highlighted and shown as an example to the first home buyers that are out there, because it is possible. You have a chat early, work out what's possible, work out the game plan, the strategy, and do the work. So yeah, props to you.
Thank you.
Yeah.
Yep.
Proud moment, proud mortgage broker moment.
I'll pass on to Tom as well. Yeah.
Any closing thoughts for anyone out there?
Don't lose hope would be number one. I think, we touched on it before, but get educated is number one. Get educated. Can you do it? If the answer is no, when can you do it? Or what do you have to work towards to get it done? And then ask yourself, why are you doing it? Why are you doing it? Usually it's to set yourself up. Some people want a home to live in. But yeah, get educated and have a chat to these guys and then have a crack.
Sweet. I agree. You need the right people behind you. You need to have a plan. Got to remember that this property is never going to be the one you're living in.
Exactly.
Yeah.
So you got to treat it like, okay, well, what is the purpose? Like you said, the purpose of this property is to do X, and I want to do this by this time. Like have that finance plan, have a property plan in play, and have the right team behind you, and you got to hustle. Like I don't know where you're making 150,000 in less than a year at the age of 24 than other than in property, and not paying tax on it. Well, not paying tax yet anyway, but it's that capital growth, that growth piece. I'd be stoked to have 150,000 in a wealth creation strategy at 24.
Yeah.
I barely had like $5,000 to my name at that when I was 24.
Yeah.
And
Well,
you can do it.
The average age of a first home buyer is, I think, in their 30s now. So what are you, 24?
You're bucking the
You've already-
trend.
Yeah.
Yeah.
You blasted that.
Yeah, but you have to build the right team. I can understand the struggles of first home buyers. If you don't have the knowledge, there's no way you can move forward. It's simple as that. Like you're setting up roadblocks in your own mind really from day one. So, and obviously I was fortunate. Chris has educated me within the last 5 years I've been with him, to the point where I am now, where it's clockwork. So
Sweet.
all thanks to him really, or else I wouldn't be sitting here.
On you, Chris.
Yeah, on you, Chris. You've been on this podcast as well.
Yeah.
It's almost been on this as much as Luke. But anyway, mate, guys, thanks for coming on. Appreciate it. Luke, if people want to find you, how do they find you?
Yeah, Instagram, Facebook, TikTok, Luke Ashby Mortgage Broker. But any first home buyers out there listening, have a look at First Home Buyers Club Queensland Facebook group. Got over 900 members in there now. Like I said before, I have created a budget platform for first home buyers, and I wish I had that when I was saving and getting ready. So that's in there. It's free. Have a look at it. Love to have you on board.
Jem, how do people find?
It is pretty tricky to find me, to be honest. But LinkedIn,
I know it's tricky to
I
find
probably
you.
have to work on that, to be honest. But yeah, LinkedIn's all my work stuff's on there. So Jem Corrish on LinkedIn. But yeah, I'll probably have to work on a social soon.
Lucid Property Investments.
Lucid Property Investments. Chris McNulty has a website, and I think he's got a big LinkedIn profile as well. But most of the stuff is all on there and accessible.
Yeah, awesome. Guys, as usual, the information on this podcast is very general in nature, doesn't take into consideration your personal circumstances. If you want to talk more about finance, Luke and I are here. If you want to talk property or wanting to know more about how Jem did what he did, just hit him up on LinkedIn as he's mentioned. You want to find me at Dion Finance Specialist, Dion Fernandez on LinkedIn. Thanks for listening, and we'll see you all on the next episode.